KVB PRIME, developed for global traders, growing together with you.
Welcome to KVB Prime Weekly Market Commentary. Today our topic is US dollar and gold consolidate with fears of second coronavirus outbreak. The total number of confirmed coronavirus cases in Germany rose by 913, and the death increased by 101 on Thursday, after the country eased a nationwide lockdown to protect the economy. Other countries that have eased restrictions have also seen new infections, undermining the previous investors' optimism that the economy could soon return to normal. The threat of second wave of coronavirus breakout has unnerved investors and boosted safe haven assets demand. Traders sold the trade-sensitive Australian dollar in favor of safer assets such as the US dollar and gold, as hope of a rapid global economic recovery from the pandemic faded. Thus, Australian dollar fell by 1.78% in the past week and closed at 0.641. Further, New Zealand Central Bank stated that negative interest rates were an option. Then, New Zealand dollar fell by 3.36% to 0.593 last week. US dollar index rose 0.62% to 100.38, and gold increased by 2.38% to 1,744. US jobless claim maintained in the millions last week. Important economic figures were also gloomy, including monthly retail sales, consumer confidence index, and industrial production. Hence, the growth in the dollar was small. Further, US President Trump has repeatedly spoken in favor of negative interest rate, even as Federal Reserve have tried to downplay this possibility. Trump also stated that China-US relation has become worse during the COVID-19 outbreak, and even suggesting he might cut the trade with the world's second largest economy, which intensified the China-US trade relation. In addition, the pound remained under pressure last week. The UK government refused to extend the deadline for the Brexit to beyond December. Both the UK's and the EU's negotiators stated on Friday that the negotiation was stalemate, which increased the risk of a non-deal Brexit. Coupled with news that the Bank of England might consider negative interest rate, the pound fell 2.45% to 1.21 over the last week. The Italian government has approved a long-delayed €55 billion stimulus package aimed at helping business and households to overcome the coronavirus crisis. It includes tax reduction to help firms recover from the downturn and offer various grants to households, such as subsidies for childcare. The stimulus package also increased aid for tourism sectors, since it is one of the hardest hit sectors. Further, Germany and France agreed to provide €543 billion funds to help with the economic recession in Eurozone. The Europe claimed the most in almost 6 weeks yesterday. Now let's talk about the weekly highlights for the major currency. US dollar index went up by 0.62%. Euro went down by 1.8%. The pound went down by 2.45%. Australian dollar went down by 1.78%. The gold went up by 2.38%. WTI went up by 5.85%. Brent went up by 9.57%. Dow Jones went down by 3.02%. SP 500 went down by 2.61%. Now let's talk about the major asset intraday analysis. US dollar index continued its 6th week of oscillating adjustment, with the traditional triangle pattern. After falling from the recent resistance 103, it oscillates between the boundary of resistance 101 and support 98.3. The current volatility remained consistent with the last week's pattern. However, the oscillating boundary continued to narrow down, and the oscillating triangle patterns become more clear in daily chart. Further, as mentioned in last week, traders should pay attention to the breakout of the narrow boundaries between the resistance of 100.5 and the support 98.7. This strategy remained the same for this week, especially the breakout of resistance 101, which is likely to open up more trading opportunities. The euro continued to repeat the movement that we analyzed last week. Following last week's analysis, the euro has its own triangle patterns that need to be concerned about. The first resistance 1.1020 and the first support 1.0720 are the key prices. The second resistance 1.1150 and support 1.0630 will be threatened only when the breakout is made on daily level. Further, it is important to monitor the trading opportunities once the 6-week oscillating boundary is broken. In particular, the unilateral traders should follow up. The pound broke through the support 1.2260 that we shared last week and continued to break through the next support 1.2160. The lowest dipped to around the price of 1.2075 and rebounded at this support position. The key for this week is whether the pound be able to open up more space, either continue to fall or rebound to 1.2340. Technically, the pound will still be dominated by shorts, as long as it does not rebound to the previous high of 1.2340. Thus, traders should watch out for the risk of a sustained fall. Gold performed well last week. We stated from last week that from the oscillation and candlestick pattern, the gold is likely to rise, rather than long stagflation reverse downwards. So we see that this week, after the gold boost and broke through the upper resistance 1,723, it continued to break through 1,747 on Monday, and even took over the upper resistance 1,760 for a short time. Currently, the market encountered resistance at this price position, and the price went down. But this week, we should still monitor both the resistance 1,760 and 1,780, whether there's a chance for gold to boost again. Overall, the gold is working hard to reach a new high price this week. Hence, it is important to observe if the longs can dominate again after this adjustment. Thank you.